You check your portfolio every morning hoping for green numbers. You research companies for hours, read earnings reports, follow market news religiously. Meanwhile, you're watching certain politicians somehow nail trade after trade with suspicious timing. Here's what you suspect but can't quite prove. They're not just lucky, they have information advantages that seem almost unfair. I've spent years tracking what the smart money actually does, and here's the uncomfortable truth. Congressional members often know about policy changes weeks or months before they hit the news. When they buy defense stocks right before announcing military contracts, or dump bank shares just before banking regulations drop, it's not coincidence. Take Gilbert Cisneros. This guy made 259 trades in recent periods, more than most day traders. But here's where it gets interesting. You can actually track every single one of these trades legally. The question is whether you know how to find them. Most people think congressional trading is either completely secret or completely transparent. The reality is messier and more opportunity-rich than either extreme. Yes, representatives must disclose their trades, but they get up to 45 days to report them, and the filings are buried in government websites most people never visit. April McLean Delaney logged 96 trades, Josh Gottheimer hit 57 trades. All of this is public record, but finding it requires knowing exactly where to look. That's not even the wild part though. While regular investors are scrolling Twitter for stock tips, informed traders are using specialized tracking websites that aggregate congressional filings in real time. Sites like QuiverQuant, Capital Trades, and Unusual Whales have turned government disclosure forms into searchable databases with email alerts. You can literally get notifications when specific representatives buy or sell stocks. The interface looks like a Bloomberg terminal, but it's free public information presented in a way that actually makes sense. But the second pattern is the one nobody expects. Looking at who trades the most reveals something fascinating about political positioning and market timing. Jared Moskowitz with 34 trades, Maria Elvira Salazar with 32, Dan Newhouse with 31. These aren't random numbers. High-volume political traders often sit on committees that directly impact the sectors they're trading. Financial Services Committee members trading bank stocks, Defense Committee members trading aerospace companies. The correlation isn't illegal, but it's definitely not random either. Here's where the real opportunity emerges. The difference between knowing about political trades immediately versus finding out months later is the difference between following smart money and chasing old news. When Thomas Keene makes his 24 trades or David Taylor executes his 23 positions, the filing might not show up for weeks, but the market impact starts immediately. Early tracking lets you spot patterns before they become obvious to everyone else. Professional traders pay thousands for political intelligence services that essentially do this same analysis. You're about to learn how to do it yourself. Not all congressional trades are created equal, and blindly copying every political portfolio move is a recipe for disaster. Tim Wahlberg's 16 trades and Matthew Van Eps's 13 trades might represent completely different strategies and risk profiles. The key is distinguishing between defensive portfolio rebalancing and aggressive sector bets that coincide with upcoming legislation. Look for unusual position sizes, sector concentrations, and timing around committee hearings or policy announcements. That's your signal versus noise filter right there. Here's what you can do starting today. First, bookmark 3 congressional tracking sites and set up email alerts for the most active traders we discussed. Second, cross-reference their trades with their committee assignments to spot potential conflicts of interest. Third, don't copy trades blindly, use them as research starting points for your own due diligence. Fourth, track the timing between their trades and related news announcements to build your own pattern recognition. This isn't about gaming the system, it's about using publicly available information that institutional investors have been leveraging for years. Look, following congressional trades won't make you rich overnight, but it will give you the same information edge that professional fund managers pay serious money to access. The difference between successful investors and everyone else often comes down to information quality and timing. You now know how to get both. Ready to take your investment research to the next level? Visit nexusaicalls.com. We'll help you turn this knowledge into a systematic approach that actually moves your portfolio forward.